if your first customers are not quite angry about your product in some form or fashion, then you probably waited too long to get it in front of them.
How did your motivations change in terms of what you want to do, as well as how badly you want to do that?
So the game gets bigger, is what I would say. There's always a bigger game to play. I always sat there and I was like, when we get to this step, then I'll start to chill out and I'll be like kind of done type thing, but it was never done.
Paul Thomas, the CEO at Somnia, the fastest and most efficient EVM Layer 1 blockchain ever, capable of processing over 400,000 transactions per second with sub-second finality.
What do you think the biggest issue has been to date for Web3 gaming?
Expectation problem, where the 21 cycle had massive gaming boom. Everything went to insane levels of valuation because it was going to be the next EA, the next Activision Blizzard. And I'm just like, it's very unlikely that will occur.
It's quite hard to maintain success in the gaming industry right now. How do you see that whole shift within gaming specifically?
Gaming will become much more like attention-based games where you'll have smaller experiences built by smaller teams much faster that live for only a few weeks maybe, and they become massive hits, and then they become very viral, and then they disappear again.
What have you found most valuable to your whole journey in life?
So
welcome back to the Lock In or Log Off podcast, where I speak to builders, creators, and investors to understand how they spot the opportunity and how they navigate their way to success. Today, I'm joined by Paul from Somnia. How's it going, man?
yeah, it's great to be here.
I like to kickstart things with understanding how people have gotten to where they are now in Web3, and a lot of that story really comes kind of pre-Web3 in particular. What was life like for you pre-Web3?
Good. Pre-Web3. So I started off my career in finance back in the day. I went to uni, did computer science, joined Goldman Sachs for my sins. I did that for money, I'll be honest with you. But I always did like finance, to be fair. But I kind of got bored then. Ever since I was a kid, I've loved video games. I've always wanted to work in the games industry, but I heard like horror stories about the video games industry. I was like, okay, I'm not going to do that. But I got really lucky after working at Goldman for a while. I met a very early stage startup called Improbable. So we had this vision to build this insane video game. It would never be built in reality. We were young and stupid, could never get built. And so I was there for about 13 years. And that journey was a very wild journey. So I started there when there was 4 of us back in the day, working in my CEO's house, which was great fun. And we grew that company from 4 to then 1,200 by the time I left. Became a multi-billion-dollar business, raised over $700 million. So it became like a big company. We pivoted a lot, but primarily our business was selling technology to the games industry and services to the games industry. We also had a defense business. We also did stuff in the entertainment industry. So things like sporting events and music events. And so my journey there, I pretty much did everything. TLDR. I was an engineer in the core tech. That's where I started. But we pivoted to being a platform-based business. So I created the first platform version of the product, put it on the kind of cloud, putting a set of UIs around it, and then started selling that to the games industry. So we got our first kind of 2-3 early customers. I became then the first support engineer. That was quite the journey. It was very stressful because the tech was broken all of the time. I'm just running around with my hair on fire being like, guys, we've got to fix this. So then we kind of scaled the business. I then moved into the sales side of the business. So I was the first sales engineer. So I went around the world selling the products to people. That was all the way from like the big AAA industry all the way down to like small independents. So I saw the whole gamut of the industry, learned a lot, came back after doing that, then did product management. So we had the problem that a lot of tech companies have where we had really smart engineers, but they just didn't care about customers. They just wanted to build tech because they thought it was cool. And I was like, this is not a way to build a business. We need to put in business models and some kind of roadmap to building stuff that makes sense. So I created product management, did that for a while, grew out that team, replaced myself, then went back to the commercial side of the business. So we had another classic problem. We were a very technical product. And I was like, guys, we need to actually sell what we're building and not sell some random made up stuff. So I created what's called product marketing, which bridged the two functions together to make sure our marketing team really understood what we were building and our sales team sold what we had, not what they wanted us to have. Grew that out, then became second in command of the commercial division, basically. So that was my journey in Web 2, primarily in the games industry and then selling stuff to the sports and music industry.
Wow. I mean, what a journey. It sounds like it is an absolute roller coaster. There's so much to jump into on the Improbable side, but with Goldman Sachs, what was your role specifically there, and what did you learn from that experience? I know you mentioned that obviously you always knew you wanted to go into gaming, but was there any key things that you learned from your experience while there?
Yeah, so I worked in risk tech and pricing. So basically, TLDR, we kind of worked out what things should be worth inside the trading book, and then went to traders and be like, you've mispriced stuff. Because the way things work in reality is traders say how much they think stuff is worth. We would then do pricing models and risk analytics to be like, that doesn't make any sense, it's wrong. What I learned there is a very good question. I think I started to learn the tools and techniques of how you build software at scale. I think when you come out of university, you know how to program, but you don't know how to work in a large scale team. And what I really learned at Goldman very quickly is how you scale up software to be developed by tens, hundreds, thousands of people. In fact, some of the products I worked on. And that was incredibly invaluable when I joined Improbable. I remember joining Improbable. They had no kind of software engineering, no kind of techniques and tools. And we kind of brought that all in. And I think that was incredibly important there. I also learned a lot about the programming work is a very small part of what you need to do to get stuff done. Actually, most of the job is a coordination job, trying to get tens, if not hundreds of people to coordinate and work on the same thing in a coherent manner is actually much harder than the day-to-day programming. Even though I, as a person, just wanted to sit there and code in a corner, I started to learn already that just coding in a corner wasn't going to get me to the impact I wanted to do. So I also learned that there as well. And I learned a lot about finance, obviously.
Yeah, on the finance side of things, obviously you said you analyze the risk as such. How do you see the Web3 industry in terms of people's appetite to risk and also the misalignment in how things are priced in Web3?
So in terms of risk, I think it's absolutely insane the level of risk people take, but I understand. And I take it myself, in fact. I think ultimately there's this concept of being able to take the volatility. And if you buy good assets, you hold them and can take the volatility. I actually think certain Web3 assets are very good. I think there's a lot of assets that are incredibly speculative and are just junk. And you should realize you're buying that when you're buying them, but often you get caught up in the moment and can't stop that. In terms of pricing, this is a really interesting one. So I've actually done a lot of work on like the fundamentals of protocols and projects. And if you look at them from a fundamental perspective, only really some of the DeFi protocols make any sense in the space from a like price to earnings, revenue type ratios, like traditional financial metrics. The chains are all absolutely crazy. I think they're pricing, assuming this future where you have all of finance and all of basically economics basically being on chain at the end of the day. And so if that future occurs, these chains are reasonably priced. But if that future doesn't occur, they're incredibly overpriced. The DeFi protocols are very interesting. I actually am a big holder of some of them because they actually have logic behind them in terms of how they're making revenues and how the tokens make sense. And then there's obviously the speculative stuff that I think it's all comps at the end of the day. And I don't think the pricing is incorrect if you're looking at comparing it to other things. But I do think it's bubbles and people need to be aware that they're buying into bubbles. And the whole ethos of bubbles is you buy in and you get out. That's the trick, basically.
With the change, you mentioned like obviously they're priced at the speculative of the future of its adoption. But surely that means like the upside to most chains specifically isn't as much there because you're kind of already pricing in their success of adoption as such.
Yeah, I think so. I think the chain pricing, honestly, there's more factors than that though, because there's also like a lot of control of the supply. So if you look at the total token supply of a chain and look at like its price earnings compared to total token supply, it looks absolutely insane. Then if you go deeper on some of the chains, they have really interesting economics where some of the tokens are burnt, so the supply reduces over time. A lot of the tokens are inherently locked because of staking mechanisms and those kind of things. So when you look at actually the total available float and then compare that to the earnings, it's a little bit more reasonable. But I still think most of them are overpriced and there will be a reckoning. I think we're already going through that reckoning right now. If you see people being like, when is it going to be alt season? I'm like, I don't know if it will be alt season.
Don't say that.
I think for some assets it will, because there's always going to be the hype and the interesting assets. But I think for a lot of assets, it's going to be hard to get people who are now coming in from TradFi actually buying into this stuff.
Yeah, it seems like fundamentals matter a lot more now. Like obviously we've seen even like hype be a lot of like this cycles narrative as such. And it kind of goes down again to the fundamentals in itself. And I think it's more, we're seeing a lot more, like you say, even bubbles within the altcoin specifically of where we're seeing as kind of an alt run as such, but it's not a kind of broad industry alt kind of push in itself. So, which I think is good. I think it's maturing as an industry, and we're actually looking at businesses that are sustainable outside of just digital asset sales and such. But going back to the time at Improbable, you mentioned that one of the biggest things you learned was the coordination of multiple parties and multiple team members towards a goal. What were the learnings of like how you do that effectively, and now that you're taking to Somnia?
Interesting question. So I think it ultimately comes down to two key things. It's being very clear on the outcome and making sure everyone understands the outcome, and then communicating that many times. I think people don't understand. I call it the rule of seven. You have to tell people something 7 times in different manners in order for it to really start to sink in. So being incredibly clear on the outcome and incredibly clear about the priorities. What I tend to see happen a lot is people get confused, even if they have a clear outcome about what is important and what is not important. And you as a leader need to be very, very concise in terms of this is the most important thing right now, get everything else. It's incredible, actually, when I do this all the time in our business. In fact, sorry guys, you're going to hear one of my management techniques that they're going to be like, I know you do that now. So I will ask someone, can you get this done? When can you get this done? And they always say next week or next month. That's like the classic term. And I'm like, well, can you do that by tomorrow? And they're like, no, because I've got X, Y, Z, X, Y, Z. And I'm like, well, this is now your top priority. Can you get this done by tomorrow? Yes. And it's just a question of priority at the end of the day. And so I think that is a massive hack, that if you as a leader need something done faster, you can basically just tell them this is the first thing you need to do rather than everything else. So those two things, they sound very simple, but they're actually very difficult in practice, and people miss them a lot, especially being very clear on the outcome of the business that you want to drive.
Yeah, I think it's hard to coordinate multiple parties as well, especially within Web3 of like making sure it's all coordinated in terms of from marketing, the dev side, everything like that. But again, you mentioned you joined Improbable, 4 people, scale up to thousands. I think something that a lot of people don't realize is like the difference of how you go from the 4 people to 20 and then 20 to 1,000. What were the lessons that you learned from like the 4 to 20 stage, like kind of 0 to 1 as a startup? What were the key lessons to getting to that stage and being successful for that stage of a business?
Yeah, so I call it the rule of 3. Whenever basically you're around triple the size of the business, you get new problems. So 3 people, 9 people, 30 people, 90 people, 300 people, and then 900 plus kind of thing. And then there's probably another one after that I didn't experience. So the early stages, I think the key thing is so in the beginning, you probably don't have any processes and practices. You just you can talk together and everyone is very much on the same page. When you get to 20, you start to realize you need some kind of project management and some kind of processes and practices to help manage the organization, because you'll have multiple teams that need to collaborate together, and that needs collaboration tools. I, as a person, have gone so many ways here. So I became very process orientated very early in my career, like the whole Gantt charts craziness. I realized that was a massive waste of time. And then I threw that all out. I was like, no more process. Everyone does everything. That's also really bad. And there's a sweet spot that you need to kind of understand. I don't know. It's very dependent on the team. Some teams are naturally kind of process orientated, so you don't need as much. Some teams are not. I think the other thing is you have to realize of different styles of working between different people. When you're smaller, you're probably all quite similar as people. And as you grow, you'll get different types of people. And 20 or so is when you really experience that. I remember have this a lot with artists. Never worked with artists before. And they just think completely differently to engineers, and trying to help them understand how to estimate tasks, how to plan things effectively was an incredibly interesting process to kind of work through what was the roadmap, what we're going to get done in this week, in this next 2 weeks, in this next 4 weeks. So yeah, I think it's then those things about adding some coordination tools and layers and processes and practices, and then how you work with effectively with different people. I think those are 2 things that are very interesting. Yeah,
I think that's fascinating. I think there's definitely a big difference in persona when you look at the artists to devs and how that world works. But you obviously joined very early and was there for a lot of the success. I'm sure throughout that success, your life changed a lot as well. How does your motivations as a person change as you kind of go through, obviously, huge success? I'm sure you've done very well for yourself. How does your motivations change in terms of what you want to do, as well as how badly you want to do that?
Interesting question. So the game gets bigger, is what I would say. There's this weird problem. I don't know whether it's just a me thing. There's always a bigger game to play. And that's why I always sat there and I was like, when we get to this step, then I'll start to chill out and I'll be like kind of done type thing, but it was never done. So I think there's definitely arcs. So there's an arc in the beginning where a lot of people have this. I didn't personally have this, but I saw a lot of people in the organization have this, where it was about money. This is about getting to a certain level of financial wealth, and then they were going to retire and stop. Some people did, and some people continued after that. So I think for me, that's like the first step. And then you start to go for what is meaningful in the world. How can I help people in different ways, and how can I impact the world in a positive way? I was always more slanted towards that. And I think, though, that helps you keep the drive, basically, because you realize there's something bigger than just kind of money and financial gain at the end of the day. But I think the big thing for me is there's just always a bigger game. There's always a bigger thing to play, whether it's like just trying to do your first fundraising round, trying to take a big project to market and cause massive impact with lots of developers, trying to raise money from mega funds. There's always a different game to play that kind of raises the stakes and improves you as a person, which I just love and I couldn't stop, basically.
Yeah, I can see when you're speaking about it, there's a level of passion about taking on those new challenges as such. Would you say you're an obsessive sort of person?
Yeah, I think I would. I get very, very obsessed with things and very, very focused. And then when I've got them to a point that I'm happy with them, I move on to the next thing. But I wouldn't say I'm a perfectionist though. The thing I've learned, and this is something that I messed up very early on, is that if you spend too long kind of perfecting something, it will probably be wrong. The thing is, you have to assume you're going to be wrong, and getting things out there and in market as quickly as possible, I think, is a very, very important skill and life lesson that every entrepreneur needs to learn. Because ultimately you learn from the market and learn from your customers. So in fact, I have a saying now where if your first customers are not quite angry about your product in some form or fashion, then you probably waited too long to get it in front of them. So for me, I'm not a perfectionist anymore. I've definitely lost that, but I'm definitely very obsessive. I can think of many video games I've spent way too long playing, getting very obsessed with. I can think of many things at work that I've spent way too many hours of getting obsessed with. So yeah, probably I'm obsessive.
Interesting. Yeah, I think it's a common trend with a lot of people that I've spoken to on the show and that have done very well. But what are some of the other things that you can correlate to your life and business that have helped you, whether it's looking at the likes of philosophy or whether it's looking at the likes of science? I recently had someone on that was previously a scientist, and he spoke a lot about, basically how he takes the fundamentals and how he views and studied science and is able to apply it to entrepreneurship. Is there any kind of vertical that you found was very applicable to helping you understand fundamental frameworks and how to scale businesses as such?
There's loads. So if you take science, I think understanding how the scientific method is conducted is incredibly valuable, because essentially it allows you to apply those methods to your business. Everything is an experiment at the end of the day, in my view. And I think people worry about being wrong. And what I tell people is actually being wrong is good because it gives the organization information that we know don't go down this path or don't do this thing. But in school, you're taught you have to always be right and have to always get 100%. And I just think that's really bad advice for every entrepreneur. It's about trying things and experimenting. And so understanding how they do those scientific methods, how they do those papers, I think that's really, really valuable from the science sphere. Philosophy-wise, I read a lot of philosophy. I'm quite a philosophy nerd. Stoicism has been a big, big thing for me. I think ultimately that one of the biggest sayings that always kind of gets me is the obstacle is the way. That framing is such a good framing because there are so many times as an entrepreneur, you'll be like, this is so hard. What do I do? And if you think about actually leaning into the pain and the struggle is actually the way to get things done and the way to become better, that's such a good frame. And there's so many things from Stoicism that I love as a frame. And so I take that a lot as a person and use all the tools there quite a lot.
You mentioned obviously going through those obstacles is like the key and the struggle as such. But like, when do you, as an entrepreneur, you also have to know when to pivot and when to know this, exploring this is incorrect and we should explore a new route. How do you tell when to stop exploring a certain route, or when, because like there's the whole battle of, I want to persevere and I want to really get through this, but there's also dead ends as such of like, probably shouldn't go further down there. How do you decide when to stop?
Yeah, so I think traction is the key thing. If your idea is wrong, you will get no traction and you'll know that very quickly. The big risk that I've had in a previous product is what I call like the valley of death. So you have this adoption curve and you can get stuck in this valley of death. So you get essentially early adopters and your metrics going up and to right and you're like, we're winning. This is great. And then you get stuck in this valley of death and it's called crossing the chasm. There's a book about it. That is a really tricky place where I think you have to just keep exploring and going, and then you'll see an inflection point. And then if you never see that inflection point, you're probably wrong. How you know you're wrong, I cannot tell you because it's really dependent on the business. But I do think that most startups fail because the entrepreneurs behind them lose the will rather than they had the wrong idea. You will know very quickly if you just have a bad idea. But I think there's a massive willpower thing, which you have to struggle through that chasm. You'll go through lots of pivots and weaves and stuff like that. But if your general idea and direction is correct, you'll find something in that chasm eventually. But the problem is you can stay in that chasm for multiple years and it can be very, very difficult and be like, oh, yeah, we shouldn't have done this.
I know you mentioned you pivoted a lot with Improbable specifically. Can you explain what that looked like and how you guys navigated that period?
Yeah, so we started off making technology to build massive online virtual worlds. So big MMOs, basically. The idea logically makes sense, right? Because you have games like World of Warcraft. These are the biggest games in the industry. So building technology to make those easier to build, that feels like a good product to do. And so the first game we built was actually this big MMO, and then we built tech to do that. And so we took that to market, and we got interest. And this was the problem, that people would always show interest and be like, oh, I'm interested in this. And you go down these sales cycles with the big guys and you'd be like, yes, we're about to close one of these massive deals. And we did actually close some of those deals as well. And then what would happen is the games would get canned about a year after. So I had 5 to 6, probably 7 years of taking that product to market before realizing it was never going to work. And there was 2 things. One, the games industry is inherently risk averse, and me trying to sell them these big online virtual world games, that's an incredibly risky proposition for them. Very unlikely to do that, but it took me a long time to learn that because I got all these positive signals. I'm like, oh, this is working, this is working, this is working. And so then we pivoted the tech to being just focused more generally on the multiplayer segment. And that all of a sudden you went from like the sales cycle was very hard. We were always just missing out, or things were getting canned halfway through. So all of a sudden adoption went like this. And I was like, this is what product market fit feels like. There's always this concept of like, what is product market fit? And I think the answer is, it's a really bad answer. But for me, you kind of know as a founder when you found it, because all of a sudden sales becomes easy. And now you're just about hiring more salespeople or getting more go-to-market and getting more top of funnel. And when it feels easy, you're probably on the right way. When it feels incredibly hard over and over again, probably the wrong direction. So then we pivoted to that. Then we also added a services org, which again went gangbusters and was very easy to sell in and very easy to adopt. But that initial product was wrong. We did take a lot of things and pieces from it that were then in our new products now, and a lot of learning, and the good core engineers actually helped build the blockchain today. So it wasn't wasted time because we built a really good team and learned a lot along the way. But that was a very difficult product to give up because it was like the first product, which we cared a lot about. We made so many mistakes with that product as well. Like I remember the first version, you had to program in a special programming language that no one in the games industry used called Scala. I remember showing up to Ubisoft and pitching them this, and they literally laughed at me. And I was like, oh my God, this is embarrassing. We quickly pivoted the product then to be within the game engine. Then we started getting those signals of traction. And we were like, oh, maybe this is working now. And we got big deals with companies like NetEase and so on and so forth. And we thought this was all good, but then what would happen is the games would get canned after a year or so because they were just too risky for AAA. So I learnt a lot about taking technology to market in the games industry, especially with the big AAA guys. The problem is as well, you always think there's just one more feature or one more modification or twist or turn to your product, and then you'll make it. And I think that is another mistake that you can make about so many twists and turns with your product. You're like, this is actually just a market problem. Why am I in this market? I think as well, another big thing with that product was we did analysis across the whole games industry and really looked at how many games like we were trying to sell the technology for exist each year. And it's like 5 to 10 basically. And it's like, okay, so that's your actual TAM.
Very, very small.
The whole games industry. Yeah.
What else did you learn about the games industry from an outside perspective? Obviously, there's so much discussion to go into around Web3 gaming specifically, but I think there's an interesting synergy of probably what you learned in that case in understanding these big Web3 or gaming companies fundamentally. What did you learn about their appetite to tech? I know you mentioned there that they're not huge on the risk curve as such. Were there any other lessons that you learned from that experience?
Yeah, so I think one is at the top end, game development is all about a risk management function, essentially, especially with the big guys. These are all publicly traded companies. They're worth billions of dollars, and they have to talk to shareholders and say why they're doing things. And I realized that it's very hard for them to not just go and build Call of Duty 17 or FIFA 29 because ultimately they know that's going to make them a ton of money. And if they take that IP and try and make it a whole new kind of game, that's a huge risk for them as a publisher. I also learned that in order to mitigate that, what they do is they essentially watch the independent industry. And then when things start to work in that industry, they will acquire or copy. This is what happened in mobile. So they completely missed mobile. All the big guys thought mobile was a fad. They were like, none of these games are real games. They're not serious gamers. Then you had people like Supercell and King go absolutely mad, and they started then acquiring mobile companies and creating them within themselves. So they copy people. Same thing as free to play. Free to play was like, no one will ever play free to play games. No one will ever monetize with this stuff. Obviously became one of the biggest revenue models in the industry. And then they started to acquire studios who built really successful free to play games or copied it themselves. And so they are second movers by nature because of that risk aversion. And so this is why I I tell people in Web3, I'm like, I think it is a fool's errand to try and sell Web3 technology to the AAA games industry today. Until you have some games that show real success, they are very unlikely to adopt it unless you pay them a load of money. And I'm not going to say who, but there are definitely some people who have paid the AAA games industry a bunch of money. If you pay them 20 to 30 million, you can get a semi-decent IP and they build a game for you.
Yeah.
But that's not product market fit at the end of the day. That's just
You're
paying.
forcing it.
Yeah, exactly. You're forcing it. I think that's another thing I learned from that previous experience about you can kind of, you sometimes need to start a flywheel and you need to inject money into a system to start an ecosystem going. But if you have to inject money over and over again, that's the only way you're getting new people into the system. That is fake product market fit at the end of the day. I think a lot of teams are facing this right now where you see them injecting money in, they're growing and growing and growing. This is in gaming, but across all segments actually. And they look like they're doing well, but I would really look under the covers and see, are they just paying for all of these applications?
The second you stop putting all that money in,
yeah,
will it
still stay around? Yeah. I understand it though, because gaming, as I said, is all about finding those breakouts. The games industry, basically, the other thing I learned was it has step changes that cause massive player adoption. These come from 3 different things. The first is new platforms. So when new consoles come out, when mobile came out, when consoles first came out back in the day, this causes like step changes in the industry in terms of player adoption. The second thing is genres. So when you find a new game type or genre, that causes a big step change. So when you had MOBAs came out, that was fork of Warcraft 3, big step change. Battle Royale, massive step change. Survival shooters, massive step change. So new genres cause big step changes. And then the final one is business models. So business models, when you went from box copy to expansion packs, when you went from that to free to play, when you went from free to play to maybe Web3, I think is probably the most interesting place in terms of business model expansion. You cause these big step changes. So I think that's one of my biggest things about Web3. I think there is a new business model within Web3. I think Axie was kind of scratching at it with play and earn. I don't think their economics made sense, but I think there is something there where players can play a game and earn financially that becomes more compelling and grows the pie and causes a step change. I also think there's probably a new genre to be discovered with Web3 mechanisms, but I don't know what that is yet. But this is all going to be done by independent teams, in my view, not by the big AAA guys, because they don't like the innovation because it's really risky. I learned loads of other stuff as well. The other massive thing is they in-house their technology. It is very hard to sell third-party technology. I think you'll see this if the Web3 industry gets picked up by the AAA games industry. They'll probably end up with their own blockchains rather than using a public blockchain, because they like to own everything themselves and do everything themselves and have their own ecosystems. I'm not saying for sure they might partner with someone, but it's very likely they build their own tech because they love building their own tech at the end of the day.
Yeah, and I think that was actually one of the questions I wanted to get onto, and I think it's as we start to see some consumer apps be big hits, even the likes of Pump Fun, there's rumors that they might do their own chain, so they're taking a lot of traction from Solana and a lot of activity from Solana. As a chain in itself, how do you battle against that? Because in many cases, when a consumer app gets big enough, they want to own the whole piece of the pie, really, and in a way, the tech they can build themselves at some point once they get enough money as such. So how do you battle against that as a chain to, one, keep good apps within your ecosystem, but also win that fight?
Yeah, so there's a few things here. I think one is a massive reason for this is current chains don't have the performance to support mass consumer apps. When you're getting to millions of users, you're using up most of the chain's transaction throughput, and therefore you get noisy neighbor and you get poor user experience. So first of all, you need a chain with high enough performance that people don't need to move off. Somnia, that's what we were trying to solve with Somnia, basically. So that's step one. I think step two is your chain. I think a lot of chains think of themselves as technology platforms. I think that's wrong. I think you need to think about yourself as a complete ecosystem where the user base of the chain itself is part of the value proposition. And you having some ownership or control over that user base is very important. I actually think of Somnia as a blockchain, as a publisher, Web3 game publisher with a blockchain rather than a blockchain first, which is weird. And so we are doing a lot of work to build up that consumer base, which then is very hard for them to just take all the consumers off the chain at the end of the day. I think the other thing as well is they will outgrow and maybe take and leave your chain, but you can still kind of think about technology offerings you can give them, because they're not probably going to build up their own core blockchain technology. And so you may be licensing the technology. This is what Arbitrum does. This is what Optimism does. That's another model that you can think of to keep that kind of upside. I also think chains and ecosystems, the mistake they make, which we're trying not to make, is they don't take some kind of upside or ownership within key applications in their ecosystem. They give them grants and they're like, please build on us, and then they have no upside exposure, which I think is mad. So I think also change should be thinking about how they get upside exposure to those projects. So if they do leave, you're still winning at the end of the day. I don't know why more people haven't been doing this in the space, because there's been hundreds of millions of dollars of grants going out to these projects.
But they get no piece of the
They
pie
got no
from
piece
it.
of the
Like,
pie. Some chains have.
yeah.
I'm not going to name names, but there are some chains that are notorious for doing quite strong deals and then dumping people's tokens, and they
Yeah.
get very angry.
I think some of the new chains are looking to, some of the ones I've been speaking to us are viewing it in the same way. Like they have to have some sort of equity within the businesses that build within the ecosystem to truly be able to sustain it. But I think, yeah, all the previous ones haven't. How much do you see of that as an advantage of being, in a way, second movers within the blockchain kind of market as such, and being able to learn from previous chains, basically mistakes and mishaps as such?
Yeah, it's massive in my view. I think learning from what people have done before gives you so much edge. You can learn from the tokenomics design, how they did emissions, how they think about security, how they did grants, how they did ecosystem building. It's an incredible advantage, I think. I do wonder what will happen as a next step. I always think about what are we doing wrong today that we shouldn't be doing that the next generation are going to learn. But it's so useful. You can also hire people who have had the battle scars, and they're so valuable as people because they know they were in the guts of how that thing went to market, and they can give you all the learnings by hiring them, essentially having their brain. And so it's incredibly valuable. I think that you have to learn from the past. If you're not looking about what's out there, I don't know why you wouldn't, basically.
What do you think is the most pivotal learning you've had from the previous blockchains that you think Somnia has an edge now coming to market?
Ooh, I think there are two things. I think one is specialism. So a lot of the chains in the previous cycle, general purpose blockchain basically was the thing. You can do anything. I think the ones that have worked out better, so there obviously are still some like that, Solana's still like that, Ethereum's like that, but it's not the general case. And I think ones that have become specialists in certain segments are still continuing to grow, whilst the ones that were kind of very general purpose and never got that initial bulk of traction, they're kind of dead now. I don't think anyone uses them. So I think the specialism aspect, I think, is very important. I think the other thing I would say, that grants process has been a massive learning. It's very hard to not name names when I'm doing this, but I've spoken to people who did those kind of programs. They just gave away so much free money without very clear criteria about why they were giving away the money and what the ROI was and whether they had upside or anything like that. So that's a huge learning factor, I think, as well. I think the final thing is how you secure a chain. So thinking about the tokenomics. I've studied all of the chains tokenomics in an incredible depth now. And there are some that I think are financially flawed. I'm not going to name who. And there are some that are very, very solid and very, very interesting. And so that is an incredible learning that you could easily make that mistake yourself. I do worry, though, about our tokenomics. They're different. They are different to any other chain that I've seen before. And we'll see what happens with that. I think it's the right plan, but I don't know. That's the one.
What is the plan for your guys' tokenomics? What makes it different? Where's the risk coming into play?
So we are creating a deflationary token, which isn't normally done in the L1 space. L1s are normally a flat token or an inflationary token. The reason why is you kind of need to, inflation makes sense because you can have your project live forever. If you have a 4% inflation rate, you can pay validators a guaranteed 4%, but it means that token holders are getting diluted every year and they just don't know it. And so we have taken a deflationary model, which is very different. That means our project has a life cycle that has to get to what I call the break-even point. I'm not going to say how long that is, but basically we have designed the project that it has to get to a break-even point. Otherwise, the tokenomics will then have to pivot to an inflationary model, or we'll have to shut down the project. And that's very different, I think, to a lot of people. I've done that because I think it makes better token economics at the end of the day. It actually makes a system which will increase in value over time, rather than a lot of these systems, they're just designed to be down-only charts eventually. So that's, I think, a big, big difference that I've never seen anyone do before in that one space.
And how much is that, obviously you guys are focused and specialists within Web3 gaming, how much is that dependent on traction coming to Web3 gaming? So say you mistimed your deadline for that moment by a year before the big hit comes to Web3 gaming. Is it, from a business perspective, it pivotal that Web3 gaming finds a level of adoption for you guys to be able to find that level of success?
Yes and no. Yeah, eventually, yes. But we have a lot of levers we can play with to extend the timelines to move things around. So it doesn't have to be like must happen on this month,
Yeah.
otherwise game over,
Yeah.
basically. And as I said, there is a world where even if those timelines are getting quite close and we're not seeing any adoption or traction, you can then move the model to be inflationary at that point. So we're putting a bet on Web3 gaming. It's not our only bet, to be clear, but we're putting a big bet on Web3 gaming. This is, for me, it just intuitively is an obvious place to have applications that can get millions of users. But it doesn't have to be Web3 gaming. Ultimately, the chain can work for other sectors like DeFi, like AI. And so it could be one of those sectors and segments go gangbusters and actually becomes the main driver of the chain. And we will move if that happens to be the case. We have a thesis around gaming and we're very focused there. But I'm not saying that will definitely be the place that causes the gangbusters moment. I just intuitively see it so much easier to onboard consumers. I just see our games today. I see them get like hundreds of thousands of people instantly, and I'm sitting there like, I don't see any other application getting Web2 users that easily. So yeah.
Do you not see AI or consumer AI applications being able to do that? Because obviously, currently we've seen a huge, obviously, breakthrough within AI, and it kind of can disrupt a lot of industries and a lot of even consumer apps as such by just making things easier for people. And how that integrates with blockchain is obviously dependent. But do you not see AI as having that capability as well?
Yeah, I do and I don't. So I think the thing that I don't see that a lot of people in the space love is this idea of consumers using AI to transact on chain. I think the issue with that is you as a consumer need to kind of know what you want to do on chain. You have to ask the AI, go find me the best yield. Most of my friends don't even know what the word yield means.
Yeah.
And so I like the idea of it becoming a easier to use interface of the blockchain, but I don't necessarily buy it. What I do buy a lot more is AI is being used as financial rails to transact with each other. If you think about a future where we all have a few agents doing stuff for us, they need to transact and make deals on chain and do stuff together. Blockchain is the easiest way for them to do that because they can't set up bank accounts. They can't easily do transactions with other. So I see that much more where you'll have consumer applications then use blockchains as financial rails. That I think makes a lot of sense. And that is something I talk about a lot in terms of if you think about how we scale, I think you'll end up having tens of billions of on-chain accounts and it'll be primarily from AIs interacting and transacting on chain. But ultimately, my answer to this is if an AI can freely choose, so omni-chain world is definitely happening. They can freely choose any chain where they're going to go. They're going to go the chain that's the fastest and the chain that's cheapest, and that should be Somnia. So they'll end up transacting on Somnia anyway, I think. And then I think also there's a big move with AI plus gaming, which is very interesting, where we have a lot of people building either generative AI tools to create games or AI agents that can play within the games. And so I still see the AI narrative folding into gaming. I think it adds to everything at the end of the day.
How do you see it disrupting the gaming industry though? Like obviously we're seeing the quantity of games that come out every year now is increasing drastically and will only increase more now that AI tools are available to people. And obviously you see an indie hits do well, but you see the indie hit do well for a month or a month and a half and then it's gone and it kind of rotates quickly. It's quite hard to maintain success in the gaming industry right now. How do you see that whole shift within gaming specifically? Because I think that obviously impacts a lot within the Web3 gaming industry as well.
Yeah, this is a very big topic. So the first one is the games industry is going to get much more efficient. And so, as I said, Improbable used to have a game services business. We actually sold that business because we kind of saw the writing on the wall that what is going to happen is everyone's going to start using AI tools and the need for third-party services is going to go down. Now, maybe that doesn't happen. Maybe they just increase the amount of content. They need more and more people, in fact. But I don't think most businesses will do that. I think they'll stay flat. They'll grow maybe a little bit, but they'll in-house that talent rather than using third-party services orgs. So that's something that we decided, and I think will happen more and more and more. So because of that, you're going to get a lot more content. And so what I think will happen, and I think is already happening, is gaming will become much more like attention-based games where you'll have smaller experiences built by smaller teams much faster that live for only a few weeks maybe. And they become massive hits and then they become very viral and then they disappear again. And so we are currently investing a lot in this concept I call micro games. This is even smaller games though. These are games you play for like maybe
like TikTok-esque
yeah, exactly.
kind of experiences.
TikTok-esque kind of experiences. We just scroll through, play the game for like a minute. Some of these games are actually quite compelling. I had one the other day that I was literally playing on the train for like 3 hours. I was like, what have I done? But I think this is going to happen more and more, where games are going to hook into the attention economy much more so, and they become massive zeitgeist and then kind of disappear afterwards. This has already happened, like things like Power World this year. You also had Section 1, which was the game about drugs that people loved, but then I think has kind of disappeared now. And these games were very viral. And I think people are going to have to inherently think about the virality of their game as a fundamental factor. I still think there's going to be AAA. You're still going to get GTA 6, you're still going to get Call of Duty 17. But I think independence is going to go much more down this attention-orientated route. And I think you're going to see game experiences get shorter. And this is necessary because of people's attention spans. I just don't think people have the attention span now to play multiple hour games. It's quite sad, actually. First time ever the games industry started to flatline in terms of annual growth. I think it's because of this attention problem. You have so many people now with zero attention span, they can't even play a video game for multiple hours. So you need these micro games, basically, things like that.
How do you view that just from like a society level outside of gaming? Obviously, that we're seeing dopamine hits are just so much more frequent. Attention spans are decreasing. Reliance on AI for strategic thinking. A lot of people don't have their own decision-making abilities because they rely on ChatGPT to tell them what's facts and what's not. How do you view all of those things from a personal perspective outside of the work?
So one thing I would say to people is be very careful with ChatGPT. It kind of makes stuff up. Remember how you have to
hallucinations.
When you know it works, it essentially is just randomly predicting the next characters in a string, and so it will make stuff up quite a lot. Not even just necessarily hallucinations, just like absolutely crazy. It will kind of reinforce what you put into it a lot of the time.
That's one thing I've found is whenever you ask it a question, it's like, you're so right. And it's like, I'm not asking to be right. I'm asking to be told if like this is accurate or give me an argument. Like I want to find the most accurate truth, but in many cases it is just a yes man in those cases. I think that's probably the area that I found most frustrating on that specifically. But yeah, I think it's a very valid point.
So in terms of the societal impact, I think ultimately I don't personally like it, but it's not about what I like. It's about what the market wants and about the way the world is changing at the end of the day. You can fight this stuff and be like, no, people need to think more critically and not be addicted to stuff. But this is the world we live in now. We're connected to our devices. We have instant dopamine hits. We can get things instantaneously. And those are consumer expectations. I don't think they're going to change. I mean, there's always this talk about people are going to like just rebel and get rid of all technology. And I don't think they will, because humans like comfort, they like ease, they like to be entertained. And so I don't think these things are going away. I think it will get worse, in fact, which is kind of sad to say, but I think it will.
So would you say you're an optimist or a pessimist when it comes to AI?
I think I'm an optimist. I think ultimately we have a huge problem from an economic perspective that we need to increase the productivity of the world a lot. And I think AI is a huge unlock for that. I think a lot of people like have this, everyone's going to lose their job type thing. I actually think it will just make humanity significantly more productive. Some people will lose their job; they will be automated away. But that's happened so many times in society, and people find
we'll create new jobs.
Exactly.
Humanity's good at creating new jobs.
We're so good at creating new jobs because people need purpose; they need something to do, and we will always create new jobs. Or there's another world which Herman, my co-founder, is very big on, where entertainment becomes a big factor. So people actually spend a lot more time in entertainment experiences, and that becomes part of the social fabric much more. I love that world because ultimately I wish more people were happier and having fun rather than kind of going to a 9 to 5 and not having a good time. So hopefully we get there. But I actually think more like you, where I think more jobs will be created because societally we always create more jobs for ourselves.
And on the topic of AI, I believe you have an AI journal that you're looking to expand to the second brain, or at least I read something around that. Is that true? And how's that evolving?
I do. Basically, I have journaled my whole life. And now I basically have plugged that into a mixture of GPT and Claude, which essentially farms it out to the APIs, and then they understand me and learn about me. And then I can query things about my journal, about my past, which has just made that action of journaling all that stuff so much more valuable.
Yeah.
I was always sitting there like, one day this data will be useful, and now I can actually use that data and make it useful. I think the biggest thing is it gives the AI context about you and about your writing style and about who you are, which makes it a much better like ghostwriter. So most of the content I write, apart from my tweets and stuff, but long form, is written primarily by AI, but it doesn't sound like AI. I think a lot of people have problems where it just looks AI generated. Yeah. If you give it AI enough context and enough like fine tuning and training, it can actually start to sound like you much more effectively. But I think the biggest thing for me is the recall, about kind of bringing back memories, where I'll ask it like, when was the last time I felt like this? And it kind of brings back several times. I'm like, I remember that. So yeah, I think AI journaling I think it should be a much bigger industry, but I think people just don't journal enough.
Yeah.
That's the thing.
What benefit have you found from journaling? Like, obviously, you say you're doing it most of your life. Why? Why did you start?
It's two things for me. One was about stress reduction. So I can't sleep as a human being. I'm a very bad sleeper. I have ever since I was a teenager. And so the act of journaling gets everything out of my head and allows me to go to bed and sleep, which is very, very important. The second thing is reflection. I think one of humanity's biggest problems is we don't spend enough time reflecting and just thinking about what has happened. We just move on to the next thing and next thing, next thing. And reflecting about what has happened gives you perspective, makes life much easier, I think. So for me, it's a massive tool that I would advise every single founder use and every single person use in general. But I think the reason is because people are like, I don't have the time.
Yeah.
But I would say even like there's this 3-minute journal you can do. Just being grateful about stuff. So I always have at the top of my journal like 3 things I was grateful for. And that you can see my happiness increasing because I have every day thinking about the things I'm grateful for. And then kind of open writing about everything I'm thinking is just so useful to get stuff from my head onto a piece of paper. And then I can stop digesting it and kind of ruminating over it again and again. And you spot patterns and you see like, oh, this is exactly the same behavior as I've done before. I'm going to stop this now. So yeah, I think everyone should do it, but I understand why, because it's like time, discipline, all that kind of stuff.
What is the plan for the future of your AI journal? Is there an end goal of how you want to use it, how you want to expand on it?
I actually thought about turning it into a product. If I had infinite time, I'd turn it into a product that other people could use, because I think it's just valuable and useful. But I don't have time to do that, unfortunately. In terms of expanding it, I don't really have any plans. At the moment, I'm not doing as much development as I used to, just because work is too busy. But once I kind of get a little bit more headspace, I'll start thinking about what comes next and what expands it. But I do think it's a really cool product that probably people would use, but I haven't got time to do that yet.
That's always the thing, right?
On the shelf. One of my many things on the shelf.
add to the list of amazing ideas that you have to choose, sadly, to not to explore. But back to the Web3 side of things. As mentioned, you guys are obviously a specialist in the gaming world. There's obviously the likes of Ronin, which are also very specialized in the gaming world. There's AVAX, who also have a big piece in the gaming world. Obviously, you mentioned your moat in a way is the efficiency for like scale and speed for scaled games. But how do you win that battle fundamentally against them? Is it just through that you believe you can win that game with them, or how does it look?
No. So that is obviously a massive value proposition, because we can bring better experiences for players because of that performance characteristic. When you play a game that's on chain with Somnia, you don't even know you're on chain. You'll literally buy stuff, click stuff, play stuff, you won't even know. Then that grows into a broader value proposition. And then the cost is very important for game developers. A lot of game developers sponsor gas. So they pay for the gas for the end user, because getting a gas token is such a weird and wonderful experience. And that actually saves people a lot of money. So I'm not going to name the chain, but literally there's a game that we're just talking to now. They have a few hundred CCU, so very, very low in terms of adoption. They're spending tens of thousands of dollars a month on gas sponsorship. And so we just save developers a lot of money, and we just pitched this. I literally went to this guy and I was like, I can cut your bill to like $100 a month. And he's like, I'm in. So those are 2 huge factors, I would say, in terms of the technology side. Then there is expansion in the future. So this is more of a vision piece, but because we have so much capacity and capability, we enable developers to put more logic and data on chain. Because of that, you can build applications with that logic and data. So you can take like a leaderboard system or a high score system or a loot box system from one game and then put it into another game very easily. That creates what I call composable games, which means more games can be built faster, which means you find more fun video games, which brings in more consumers. You can't do that on the other chains because they don't have the performance characteristic. This eventually builds into like this whole idea of like every game becomes massively on chain. You get all these composable components. Games get built by everyone.
A lot of mods on top of games.
Exactly.
As well.
It goes back to the reason why I believe it will work is because it happened in Web 2 already with mods.
All the best games come from mods.
All the major genres over the past 20 years were all mods of existing games. And you're just doing that, but on steroids when you put everything on chain. That though, so first you need a really high performance chain. The second thing that we're working on at the moment is the developer experience. It is not easy to build logic on chain today for a game developer particularly. They live inside game engines, C++, C#. And so you need to think about ways that they can more easily put stuff on chain. So one of the things we have for that is we allow a developer to easily put the metadata of their game on chain. So every time someone has a headshot, every time someone wins a match, every time someone picks up an item, that can be registered on chain as a piece of metadata. Now, that in and of itself is cool, and anyone can do that. So we're selling that to Web2 devs. Adoption is actually going quite well. The value proposition is about then you get the composability of that data. So someone could build a leaderboard, someone could build like a viewer for your character. But the one that's most interesting, I think, is putting gambling mechanisms around video games. So prediction markets saying, I reckon in the next match, I'm going to get 10 headshots, put down a bet of $10. If you get 10 headshots, because that metadata system, you then get paid out. I think that's going to be pretty huge in terms of the financialization of gameplay. It's too fancy a word, but that's going to be pretty huge. And the other chains can't do that at the end of the day because they don't have the performance characteristics. And also, I just don't think the space has thought about that. The space has always thought about tokens, NFTs. And I'll be honest, I'm not a massive fan of those mechanisms. I think people have for a long time been able to buy items in games and have a good time. Have they really cared that they couldn't take those assets and sell them and get real money for them? I don't think so. Some players do, and the Steam Marketplace shows there's demand for this, but I don't think it's a strong enough value proposition that I want to play your game just on that. It has to be a good game. And then these elements are like extra value props for me as a player. So I think all this other stuff, though, basically adds value props to the developers and then also some to the player as well, which is very important. So that's on the technology side. I think from our perspective, we are also gearing up a lot on the publishing side to really help developers take their game to market. So we did this at Improbable. We had 3 of our own internal games. We have a publishing kind of team there, and kind of leveraging that to help people with their go-to-market side, I think is going to become a huge value proposition for us as opposed to other chains, who actually help your game be successful at the end of the day. Because I think a lot of game developers I meet, they're incredibly good at building a high-quality video game, but the go-to-market and business side is the part that they struggle with. And so we're going to help out a lot there. I think the other thing as well is we're doing innovative things to like hack distribution in different ways. So one of the ways that I'm talking that I'm public about is we're doing deals with like internet cafes across different geolocations and having all of our games installed there. That gives you like 10 million eyeballs day one, like that. And so those kind of distribution hacks I think are very important, because for me, distribution is the biggest problem in the industry. And if we can help them get in front of players, I think that's a huge proposition we can bring to the game devs. So yeah, we have a lot of cool stuff on the tech side, but we also are thinking a lot about the business side as well. I think that's why specializing helps, because we can just purely focus on this games vertical.
What are games currently struggling with, and how solve that first,
rather than trying to go all over the shop and trying to build up huge teams of everything.
Yeah, and to win those battles is even harder. To find what AI needs first gaming is going to be very differently. With all the on-chain data that you get, does that not in the future tie in quite well to AI as well? Because you then have a landscape of data and player data specifically on certain actions, like you say, as such, being able to like then train agents for in-game behavior and stuff like that. Is that something that'll go down in the future, or is that not something that you kind of look at?
Yeah, it's actually something that's happening today. So people are already making agent frameworks to kind of play within the games. I think people have 2 views about this. Some people really dislike it. They're like, no, only people should play games. I'm like, do you care as a player? Don't you just want to have fun and play against people who you think
there's like bot lobbies in COD already.
Exactly. I think it's just the way of the world now, and you have to kind of take that we're not living in the 1990s. The bots are just part of the player base, essentially, at the end of the day. I think the issue is when you create a game, especially in Web3, that's extractive, that bots can basically just farm the game to death and destroy the economics. And this is why I warn so many teams nowadays about, should you really be putting a token into your game? Because I worry that this is going to blow up your economy very quickly. I actually tell most teams don't do a token, because I think a token blows up most games. But anyway, going back to the AI point. So I think agents are going to be huge. But I think the biggest play that we have in AI at the moment is more generative AI. So we've got like a tool where you can go write a prompt. It will then generate out you a 2D mini game. So it's like a micro game, like I was talking about before. So you can be like, generate me Flappy Bird. You can then publish that on chain, monetize that with access controls, NFTs, or gambling style mechanics. And I think that is probably going to be the bigger play with AI in gaming, where you enable more people to become creators and develop the content, and then using the blockchain as a very easy publishing and monetization mechanism. I think that is more the play of AI in gaming, rather than necessarily agents within games. Although I've got a meeting with a startup actually this week. They're from Web2, raised a lot of money and been doing this kind of AI agents in gaming for a long time and haven't got product market fit. And I'm like, I think it's the thing that I was talking about at the start of the call. I'm like, it may be that you're going down the wrong path. I may have a path that could help you.
Interesting. I'm excited to see how that plays out.
Yeah.
But on the topic of Web3 gaming, you mentioned obviously distribution is one of the parts just for Web3 in general that we've struggled the most with. But Web3 gaming is obviously in a tough spot. In many cases, obviously we have some anomalies in terms of spots of success, but we haven't had a massive hit as such. Some of the hits we have seen don't really get the recognition that you kind of see. NFL Rivals has obviously done very well in the sporting industry as such. But what do you think the biggest issue has been to date for Web3 gaming?
Expectations. So I think there are some games that have showed success in Web3. You have Off the Grid, Parallels, NFL Rivals. These are all very successful games by any measure of the industry. But I think our expectation of Web3 gaming has been we're going to usurp the top 10 games globally and become one of these mega games.
Yeah.
I think what people don't realize is those top 10 games have been the top 10 games in the games industry for the last 10, 15 years. They do not get usurped, or they get usurped very temporarily and then come back up again. And so us believing that just adding Web3 mechanisms is going to get you into that echelon is just incredibly unlikely in my view. So I think we have an expectation problem where the 21 cycle had massive gaming boom. Everything went to insane levels of valuation because it was going to be the next EA, the next Activision Blizzard. And I'm just like, it's very unlikely that will occur. But I think there are lots of successful games that are doing good in terms of revenues and player bases and keeping them steady, if not growing them very effectively. So I don't think it's failing by any imagination, but I think our expectations were like here and they should have been here. I think the other thing is there's a lot of talk about the failures. And I think what people don't realize is the games industry has a very high failure rate. Games in pre-production around like 75% fail, and games that get to market, most of them fail as well. Like I think you have like a 90% failure rate. So you just have a very high failure rate in the games industry. And you have to know when you're getting into one of these games and investing in them by buying their tokens and NFTs, they have a very high probability of failure. This is why I told a lot of investors I meet, they're very scared about investing in gaming because they're like, oh, no, I bought some games last cycle and I lost a load of money. I'm like, how many games did you invest in? And they were like 2. And I'm like, that's the problem. You have to take a very broad portfolio approach across lots of different diverse game sets, and then you'll probably find a hit. If you go after just one game, that is very unlikely to succeed. I think another thing that people do, they index on the quality of the team a lot. So they're like, this guy was a guy at Ubisoft, this guy was a guy at this guy. I think 2 things I'd say here. One, who were they at those companies? Like there are lots of people, these games, hundreds if not thousands of people work on a lot of these games. So what do they actually do within the game? Because there are just a few people in those game teams that really drove the success of the game, and then there was a lot of people that are just doing the grunt work essentially. So it's like, who are they and what do they actually do is a massive factor that people need to look out for more. But yeah, sorry. So going back to your question about, I think what I would say is it is working. We just don't have the mega top 10 hits. And I think those are very unlikely to come, I'll be honest with you. And we will see more successful games get to that echelon of like hundreds of thousands of players. And that is a successful game by any measure of the standard.
We do just keep expecting the global hits overnight as such, in such a competitive market. But yeah, I think fundamentally Web3 gaming seems to be going in the right direction in many ways in terms of it kind of went through a little bit of a maturation over the last like 2 years where a lot of teams have obviously had to exit the space or have gone bust as such, but there's now a cohort of really good teams with really good concepts and really good initial data as such, that I'm excited to see come to market. Obviously, the big thing that with all of these games is the economies that they tie into the games and how they look to implement Web3 specifically. You mentioned you're not the biggest fans of tokens and NFTs. How do you view that for Web3 gaming specifically?
Yeah, so tokens, the model I like is inside your game, you have traditional revenue models, dollars, stable coins, whatever it may be, and then it accrues value to some token. So you essentially separate out the speculative part of people like gambling on this token versus the gaming part of gamers playing a game day to day. I think a lot of people put their token as the in-game currency, and it's just a horrible player experience to buy this currency and one day I can buy this stuff and now I can't buy this stuff anymore. And it's like, what is going on? So that I like to separate. I tell teams try and separate out your speculative element where you get a load of the people, the Web3 people who will kind of gamble on it versus your moment-to-moment gameplay elements, which then you should focus on what is fun for a Web2 player. I like to focus on a lot there. I think the NFT part, I don't mind as much actually, but what I think a lot of people get wrong is they kind of think about, okay, so I want to build a game for a Western audience. So Western audiences, you can't do pay to win. People hate it. In the East, works much better. So if you go to the China market, you can do pay to win because it's almost a social status thing there. If you have a load of money that you can buy in-game items and become the best guy in the game, you're awesome. In the West, that's a lot more frowned upon. It's much more egalitarian. So I'm going to do NFTs. So what I'm going to do skins. I'm going to do a free-to-play game and sell skins. The problem with skins as a model is you need so many players for a skins-based economy to work for you as a business to make money. Like people look at the mega games and well, they work for them, but they have like millions and millions of players. And if you need millions of players for a free-to-play skins-based model to make sense. And so what I try and push teams to do is kind of innovate and think about what are business models that could work, what are business models that are sustainable. I think a big one in the more Web3 native games, which I do think work for a specific crowd, I see a lot of them do free-to-play, where people can come in, play the game, and make money without ever putting any money on the line, which I don't think you're always going to make a system where people just extract all the money out. So you need some kind of stakes for those kind of games where people have a buy-in that then they can get into the money system and get money out if they become one of the better players in the game. So yeah, there's a lot of things there, but essentially, I think NFTs for skins don't work. NFTs for like access or season passes, they can be better there. I think you have to think about your markets very effectively. If you're going West versus East, pay to win versus not pay to win, I think in-game tokens are completely broken unless you have them completely outside of the game and then they accrue revenues. So yeah, that's a few things I'd say.
Very, very interesting. As we come towards the end of the show, what is there to look forward to for Somnia specifically in the next 6 months?
What is mainnet? So next 6 months, we'll be doing TG and mainnet. That will be very, very exciting. The team are gearing up for that at the moment. That has been quite the journey for me, and I'm quite excited to get that. But I always tell the team that is day one, basically. We're just starting now. The product is actually launched now. But a lot of people see it as like this big...
Oh, we're done.
I'm like, no, guys, this is just the beginning. So mainnet is going to be coming up this year. I think we are investing very heavily in this concept of reactive blockchain. So this is a new concept in the space. The problem we're trying to solve is today, if you build an on-chain application, you can't listen to data changes on-chain and react to it fully on-chain. You have to use either a system like Chainlink or you write an external web server and kind of listen to it. So we're allowing developers to build that all fully on-chain, which I think is going to be pretty big in terms of enabling people to build these fully on-chain applications, which creates the composability that I talked about before. Another thing as well, we're going to be kind of becoming more permissionless as a system. So at the moment, if you want to become a validator on Somnia, you have to talk to the foundation, you have to get approved, but that will become much more open and the system will become much more decentralized over the next 6 months. And so that's going to be a very interesting journey. We already have a lot of validators today. We have about 50 or so, but watching that become more permissionless and just random people kind of joining, I think would be really cool and a really interesting part of the journey as well. So yeah, that's just a few things, a bunch of other stuff though.
Very exciting. And one final question that's a little bit off the topic of Somnia is, what's one resource that you found most valuable to yourself? That can be philosophy, reading, journaling. Yeah, what have you found most valuable to your whole journey in life?
One resource that's most valuable. Goodness me, that's...
Or even in the short term, or something that's happened over the last few years that you found really impactful, whether it's a certain book or a certain resource as such.
So I read The Hard Things About Hard Things by Ben Horowitz probably 2 or 3 times a year.
Wow.
It's a book that the very few books distill what it's like to actually run a startup and what it feels like to be the leader and like have all that pressure and have to deal with it. And that book really nails that problem. And if you're going through a hard time, you read it and you feel like someone understands you because you see him going through it. And then it also has loads of really useful management techniques and tools which you can bring into your organization. And so I personally love that book. My girlfriend, I'll often be reading it and I'll just start laughing and being like, oh my God, because it's just so true.
Yeah.
And because he did it himself, Ben Horowitz did it himself, and I love that book and I read it very frequently.
Amazing. I'll have to give it a read. Well, thank you very much for coming on the show, man. We're super excited for what you guys have coming up. And yeah, good luck for the main launch.
Cheers. Thanks a lot.
Amazing.